Greetings, everyone. Welcome to the DC Bar Pro Bono Center's webinar on operating agreements for LLCs. I'm Christine Lopez-Culamani, a managing attorney with the Pro Bono Center's nonprofit and small business legal assistance programs team. Before we get started, a couple of thank yous. First, thanks to my colleague Lauren Paley for setting up this webinar, getting all of the behind the scenes registration and operations work done. For those of you who registered and are watching live, and for those of you who are watching the recording, she made that possible. Next, huge thank you to Wilson Sonsini. Our presenter, Marc, it looks like your screen was popping up. So next, our presenter, Marc Foster, is senior counsel at Wilson Sonsini, and he has enthusiastically and diligently worked to make this webinar a reality for all of you small business owners. Thank you, Marc, for that. Next, a couple of logistics for today's webinar. First, this webinar will be recorded. Also, you are able to download a copy of the PowerPoint presentation right now under the Handouts tab. When the recording is uploaded to our resource site, the handout will also be there to access it. So if you would like to recommend this presentation to a fellow small business owner or come back to it in the future, you can send that to them and access it on our Law Help resource website, lawhelp.org/DC/NPSB. For questions as we go through the presentation, please type in questions into the questions box on the GoToWebinar control panel. As we go through the presentation, I will ask any relevant questions to Marc. Please keep questions for general information and to broader, more applicable situations for the entire audience, and not fact-specific requests for individual legal advice for your business. Okay, what we are here for today. Many LLC owners, or what are called members, have heard of an operating agreement. Maybe the LLC has an operating agreement. Have the members read it? Do the pages of words make any sense? And for LLCs that haven't adopted an operating agreement yet, this can be an intimidating step. For those who haven't heard of the document, or even some of those that have one, wonder, well, what is an operating agreement? What are common terms in an operating agreement? What do they cover? What do they mean? Well, today, our presenter, Marc Foster, will take us on a journey through addressing these two big questions about what is an operating agreement and walking us through some common terms. So with that, I will turn it over to you. Thanks again, Marc.
You bet. Thanks, Christine. Appreciate it. Hi, everyone. Thanks for joining. And this is such a great topic. Limited liability companies, what they are, what they're about, how you form them, some legalities around them, and structuring them as well. And it's important for every small business to have some structure, to have some direction, to understand what they're doing, right, from a legal perspective. And so, as Christine said, that's what we're going to provide an overview about here today in today's discussion. So, broadly speaking, I hope that at the end of this discussion, you'll take away with a good understanding of what a limited liability company agreement is, what it should say, maybe what it shouldn't say, and your expectations for getting your own operating agreement or LLC agreement in place as well. So with those formalities out of the way, I will go to full screen mode here, and we'll get things started. All right. So first, just a disclaimer, right? As is always necessary, this presentation is provided for informational purposes only. It's not intended to create an attorney-client relationship or constitute an advertisement, a solicitation, or professional advice as to any particular situation. This presentation is not a substitute for legal advice. and you should consult your own attorney, accountant, and other professional advisors for guidance specific to your company. And this is really more than just a disclaimer, though. It's really just important, good information to know. You will have your own company. It will have its own peculiar, unique characteristics, and something that none of us knows anything about. Some of them are issues and concerns you'll want to talk about and deal with in a more in-depth way. This discussion today is very high level. It can be applied broadly to lots of different types of companies and situations because it is so high level. But there are going to be situations, issues you'll need to think about, maybe deal with, that you will need a professional for. And so I'll keep reiterating that point throughout today's discussion because it is really important. When you're starting a company, you want to be going in the right direction. You want to be going down the right path, and thinking about that in particular, right? How to frame your company, right, in terms of an operating agreement should be one of your primary concerns. So with that, we'll get going. What is an LLC? Well, it's a form of business organization that provides for limited liability to the owners of the LLC. It also provides for pass-through taxation so that owners are not taxed twice on the LLC's income. And I'll be talking more in detail about what these things actually mean. But there are other forms of organization, right? So corporations, partnerships, sole proprietorships, other types of organization. The LLC is a very common form of organization for small business owners in the district and throughout the country for that matter, because of those two key points that I just mentioned: limited liability and no double taxation, pass-through taxation, so that the owners aren't taxed twice. Those are really key aspects, and the limited liability aspect is especially important. So if you form your company and you form it as an LLC, the LLC as a legal entity means that you have a layer of protection, meaning if the LLC itself, the company itself, engages in business, does something wrong, it's liable to somebody for having done something, is sued, and then is liable for that conduct. As a legal matter, the plaintiff really can only come after, in most cases, the LLC's assets. It can't come after your own assets, your own personal assets. So if properly structured, your LLC does a lot of legal good for you. It means that your house, your personal home, isn't at risk of loss to this in this lawsuit. It means that any assets that you have in a bank account or otherwise, if properly set up, won't be subject to taking in connection with the legal action. The other aspect of this, the pass-through taxation, also is important because as a legal entity, many types of organization, corporations in particular, are subject to double taxation. What does that mean? Well, we'll talk about it more, but basically it's a way to minimize the amount of tax imposed on the LLC's income, so that you, the owner, take all of it and don't pay a layer of it through in taxes in the first instance. And we'll talk about that more as well. So the operating agreement. Well, the operating agreement, as it says here, is what the LLC operates under. It has the terms under which the LLC will operate. And in general, an operating agreement describes who owns the LLC, what the LLC does for business, the activities it engages in, and the overall manner in which the LLC can conduct its affairs. Now, a standard form of operating agreement will be included with materials, and today what we'll be doing is taking a look at some of the more important terms of a typical LLC operating agreement. We'll be discussing those terms in a little bit more detail so that you have some context for what they are, what they mean, how you should think about them, maybe even how you should change them in certain cases to suit your own business needs. Okay, the first provision that you'll see in the template operating agreement will be this one here, about naming the LLC. And I'm going to be reading the provisions so that we can discuss them. I don't think I can discuss something until I've read it and you have all heard it. So bear with me. Some of these provisions are a little bit long, but I do think it's important to actually read them, digest them a little bit, and then we can talk about them. So this first provision, name. The name of the limited liability company formed hereby is blank LLC. The business of the LLC may be conducted under any other name permitted by the act that is selected by the member. So as it says here, this is kind of the fun part, right? It's the very beginning. You're just thinking about starting your business. Maybe it's underway, but now you want to kind of formalize things. What is the name of it? What are you going to call it? Well, there are some limits. As creative as you may want to be, there are some limits. So those limits are basically, one, whether another business in the district already is using the name, and two, whether your name is so similar to another business name that is being used as would cause confusion. There is a way to check on this. So you would take your name, search for those for your name among the business names on the Department of Licensing and Consumer Protection website, and we have the link to the website here on the screen today. You will go to that website, and it's a trove of information. And that is one of the things that you can find there, is whether other businesses are using your name. I want to talk about a couple of specific terms in this first provision, though. The blank LLC. Since this is a template agreement, the blank is obviously going to be the name of your own company. The LLC is required under Washington, D.C. law. You need the LLC letters in the name, or LC, either one would be fine, but you do need to make sure that those letters are there. You can also, in some cases, depending on what you want to do with your business, have a trade name. And trade names also are subject to this need to check to see whether other businesses are using a trade name. Again, you can go to the Department of Licensing and Consumer Protection website, see if another business is already using your trade name or not. If not, go ahead and register that trade name as well. There are fees, and they change, so go to the website just to get the most up-to-date information. But generally between $30 and $50 for a registration. And that will make sure that you preserve your right to use the name that you want. We're going to do a little bit of a hypothetical here today as we walk through, just to illustrate some things. So for today's presentation, we're gonna follow a new bakery startup, a bakery partly because I have such a sweet tooth, and the founder is Casey. Casey's Bakery will be formed as an LLC called Capital Cakes LLC. And so we'll assume that Casey has properly gone to the department's website, checked the name, make sure that it's not being used by anyone else. Everything is good. Now Casey is ready to roll. The first formal thing that Casey should do, in addition to having this operating agreement, is filing what are called the Articles of Organization. And the articles also are called or known as a certificate of organization. And I'll read this provision now. So, filing of articles. The member is authorized to execute, deliver, and file any other articles, certificates, notices, or documents, and any amendments and or restatements thereof necessary for the company to qualify to do business in any jurisdiction in which the company may wish to conduct business. And the articles are the formal way in which you create your LLC, and not required to be done. Required to be done and to be filed with the DC Government Corporations Division. What isn't required here is the operating agreement, but it is a really important step. The articles, though, can be filed by submitting the form. We have a link for the form in hard copy. We also have the link to the form if you want to submit it online. And one way to think about this is, the articles of organization are sort of like your company's birth certificate, right? It's sort of the evidence that the company actually exists. Whereas the LLC or operating agreement, it's kind of the actual incarnation of the LLC. right? It tells you what the LLC is all about. Its personality, what motivates it, what it does for a living. It's the identity of your business spelled out in writing. And the articles need to state three things: the name of the LLC, the address of the principal office, and the name and address of the LLC's registered agent. We'll talk about those last two things here in just a little bit, the principal office and the registered agent. But those are the three things. Those all will be requested in the form, so you can't miss it. Okay, purposes. This is pretty straightforward. I'll read it though. Purposes. The company is formed for the object and purpose of fill in the blank. And the nature of the business to be conducted and promoted by the company is, again, fill in the blank. The company may engage in any lawful act or activity for which limited liability companies may be formed under the Limited Liability Company Act. And so here, obviously, you'll state what your LLC will be doing for business. And a general rule of thumb is, yes, you can be general or specific. You can be very general, especially if it's your own company. If you don't have business partners, in fact, in some cases, it's better to be more generic. You want to be maybe more specific, though, if you do have business partners and you want to set expectations and understanding of what your company is all about, what it will be doing. And being specific is important when you're dealing with other people. In general, the general terms work for a sole proprietorship form. I don't mean that in a legal sense. I just mean an LLC with one member. You want to be more specific, though, if you have business partners, so that there is no misunderstanding. There is an expectation about what the business will be all about. And the parties can agree to those things up front. And it's better to do it up front rather than down the road or not at all and then have a conflict. Conflict in business just typically means litigation, loss of money. A lot of bad things can happen when you aren't specific and you are dealing with business partners. So be specific as you reasonably think is appropriate under the circumstances, knowing yourself, knowing your business partners, knowing your business. And again, as we said up front, your specific situation might be very different, right, than someone else watching this webinar today. And so having specific guidance, good legal guidance from an attorney or other counsel will be important. In some cases, especially though, I think where you may have business partners. The flexibility though that you get from having general provisions is good, right? Your business might evolve, maybe you just have a general understanding of what your business is, but nothing specific. So the flexibility is there to be general, but the specific purpose can also be important in some cases. Here, for capital cakes, the purposes are the company is formed for the object and purpose of operating a retail bakery shop. And the nature of the business to be conducted and promoted by the company is providing fresh baked goods to the public. The company may engage in any lawful act or activity for which limited liability companies may be formed under the act. This is just an illustration of the point, right? We have a specific purpose. At the end, we include the general catch-all that says it may engage in any other lawful act or activity. And that just makes sure we cover all the bases.
Mark, when we're thinking about this purposes section and being protective when it comes to multiple business partners, would it ever be acceptable to say, you know, the purpose is formed for the object and purpose of operating a retail bakery, and instead of the catch-all clause saying the company may not engage in any other activities?
Yeah, no, that's a really good point. And in cases where, you know, Christine, if you do have other business partners, they don't want there to be any slippage in terms of what this business is doing. Their life's purpose is baking, and they don't want to see a company that maybe gets into the hot dog stand business, right, or any other type of food service. So being specific can be important. In some cases, it will be important. I've had clients who have had agreements right from the get-go about what exactly the company will be about. And that's probably a good discussion to have before you enter into a business with someone. So as much as the operating agreement isn't required, it is really good business, right? And as a legal document, it's especially good business because it addresses just those concerns that Christine's noting here, in terms of having the discussion, understanding the scope of the business, what it will do to avoid those sorts of disagreements, and setting expectations to make sure that the company can live in perpetuity, and business partners can as well. So no, that's a really good point. All right. So moving on to powers and term. So powers, in furtherance of its purposes, but subject to all of the provisions of this agreement, the company shall have and may exercise all the powers now or hereafter conferred by DC law on limited liability companies formed under the Act, and all powers necessary, convenient, or incidental to accomplish its purposes as set forth in Section 3 of this agreement. And the term of the company shall be perpetual from the date of filing of the certificate of organization of the company, unless the company is dissolved earlier in accordance with either the provisions of this agreement or with the Limited Liability Company Act. And so, as it says here, DC law allows you to operate your LLC like any business needs to operate. And so whatever may be needed for purposes of operating the company, engaging in commerce, any array of things that a business would need to do, DC law allows LLCs to do as LLCs. Your LLC can enter into contracts, borrow money, lease office space or retail space, and undertake any activities that are needed to carry on the LLC's business. Why is that important? Well, from a practical standpoint, what it means is now you can sign a lease. The LLC can enter into a lease, that lease as a member, right? You sign it on behalf of the LLC. You don't sign it in your own name because that would defeat the point of having the LLC in the first place. But the LLC name would appear on the signature line. Then you would sign it as on the byline. By in this name, in this case, Casey would be signing it on behalf of the LLC. As a practical matter, landlords may not want to have an LLC, especially a newly formed one, enter into a contract, in particular lease agreements, unless they are either co-signed by you in your individual capacity, or you can demonstrate that the LLC has assets of its own that it can rely on or income. For a startup, typically though, you probably will be expected to co-sign in your individual capacity or have a co-signer, some such thing as that. But the real point of all of this is to say an LLC can do stuff, right? An LLC is a legal entity. It is recognized as a person would be, and can do stuff. So I think that's really important. The term here of the LLC, as it says, can be for a stated period or in perpetuity, meaning forever. You just don't state any end period. And then a stated period, though, might make sense if you plan to operate only for a special event or other limited circumstance. And I'm thinking of events like we have them often in DC, right? Parades, things like that. If you're a service provider and you're providing, I don't know, balloons, flowers, decorations, something like that, but it's just for this particular event, you don't want to have an LLC operating in perpetuity. You want to open it, do the business that it's set out to do, and then shut it down so that you don't have maintenance fees and other things. That's fine. You can do that. In this case, Capital Cakes wants to be around for a long time. No special event, no special purpose other than serving really good cakes. And so it will have that perpetual term and hopefully stay open for a really long time.
For the term, Mark, if an LLC is thinking, yeah, we don't want it to be a perpetual term, there is an end goal, and once we achieve that, the LLC will dissolve. Does that need to be a specific date, a number of days? Can it be measured by the completion of some referenced project? Or are there limits on those types of what can be used as the definition of the term?
Nope. So it's pretty open. So if there is an event or a project or something like that as you say, it can be tied, the term can be tied to the end of that project, and you can say it. You can say capital cakes, will have, or the term of the company will be for so long as and until such time as, fill in the date of the, or fill in the event. So it can be tied to the completion of the event. It doesn't need to be specific. I would say it only needs to be as specific as the event is vague. So if you've got, you can't just say a parade probably, because, that's probably going to be too vague. You should identify probably, the date, if there is one, what the name of it is, something like that, just to give it a little bit more particularity to avoid confusion. But no, it can be tied to the event, to your point. All right, so next one, a little bit more legalese here. Registered office and registered agent. Registered office, I'll read that provision 6 first. The address of the registered office of the company in the District of Columbia is. Registered agent, the name and address of the registered agent of the company for service of process on the company in the district is fill in the blank again. Your LLC must have a registered office and a registered agent, as we noted earlier in the discussion, and you'll identify them in your articles of organization. The registered office is the place where your LLC will receive official notices, such as for certain tax notices, but mostly for lawsuits. It can be your home address. The registered agent, meanwhile, is the person who actually receives those notices. You can be the LLC's registered agent, or you can also hire a company to receive those notices, because there are companies that engage in that business and do it routinely for the purpose of basically making sure that notices are received. If you move around, you forget to update your address, that notice could be lost. The registered agents the companies that do those services will make sure that you get your notice, and regardless of where you may be located if you decide to move. For startup companies, we'll just include here that don't expect to receive a lot of notices or lawsuits for that matter. The owner is a good choice, or at least not a bad choice. But again, maybe something to think about, hiring a company to keep track of those records, especially if your business might become might grow and have multiple offices, multiple locations. You might move around, so it is good to know, I think, that those companies are out there. All right, capital contributions. Capital contributions. The member is deemed admitted as a member of the company upon its execution and delivery of this agreement. The member has contributed or agrees to contribute the amount of cash set forth on Schedule I here 2, and no other property to the company. So what is a capital contribution? Well, it refers to any money or other asset that you provide directly to the LLC, right? So in connection with the initial launch of a company, you may want to provide certain cash assets. Maybe you open a bank account, include that cash, have that account in the name of the LLC. And again, that might be important in the event that you need to enter into certain contracts, show that the LLC itself has some assets. It's a way of providing a little bit of credibility to the LLC. And it can be in the form of money, property, or intangible assets like contract rights, IP, that sort of thing. But to be clear here, you don't have to contribute anything, right? You don't have to contribute any money to your LLC in order to be legally formed, in order to even start it. It could be just the entity. That's fine to be properly legally formed in the district. There are cases though where founders, company owners will be required to contribute money in order to launch their businesses. I have a number of clients that that engage in investing activities, have investment funds, and in those cases, the folks that they get to come into their funds want to see that the founders have a little bit of skin in the game and expect them to contribute some assets. So In those kinds of cases, it's almost expected. It's required that the founders will contribute some money, some assets, something to the LLC. But in the normal course, it's not required and maybe not even expected. Again, just depending on your own circumstances, and if you're entering into or thinking of launching a new novel type of business, probably not a bad idea to get legal counsel, confer with them about what might be expected, what might be sort of considered market, right, and standard for the type of business you're entering into, just to make sure that you're doing what's needed for that type of business. In this case, the founder of Capital Cakes Casey not contributing any money or other property, and no need to. All right, tax treatment. This is going to be a little bit long, a little bit complicated, but really important, especially with respect to choosing the LLC as your form of organization. Tax treatment. The member acknowledges that because the company will have a single member, the company shall be disregarded as an entity separate from its owner for federal income tax purposes, unless it changes its classification for federal income tax purposes to that of a corporation, or until the company has more than one member, in which case it would be treated as a partnership for federal income tax purposes, again, provided that the company has not elected to be treated as a corporation. Regardless of the company's classification, the company shall keep books and records separate from those of its sole member, and shall at all times segregate and account for all of its assets and liabilities separately from those of its sole member. So this is dense. There's a lot here, but let's unpack it a little bit. So as we talked about earlier, an LLC is a pass-through entity for tax purposes. And this means that the owner, not the LLC as an entity, the owner is directly taxed on the LLC's profits. And that's really important, right? It means that you avoid that double taxation scenario that is typical of corporations. There are some corporate forms that aren't taxed directly. We won't get into that, but let's just illustrate the point here. Let's suppose Apple Incorporated, right? Everyone loves the iPhone, right? Apple makes a lot of money. They make a lot of, they have a lot of profits. Apple pays taxes on its profits. So let's say Apple made $1 billion last quarter. I don't know what it did, but let's say it made a lot of money. Apple will pay taxes on that $1 billion. After Apple has paid the taxes on that $1 billion, whatever's left over belongs to Apple's owners. Apple's owners, as a corporation, are its shareholders. When Apple distributes those after-tax profits to its shareholders, those shareholders then also pay taxes on the distributions that Apple just made, right? So Apple gets hit for taxes. The same pool of money, it then pushes down to its shareholders. Those shareholders now are paying on the pool of money that Apple distributed and already just paid taxes on. So there's two layers of taxation. That can amount to a lot in taxes. If your LLC, if your company is really profitable, that means that you'll be saving a lot in taxes, especially if you're a sole owner. And that this scenario, as I've referred to before, it's referred to as the double taxation of corporations. It's why corporations are disfavored in general, especially for startups as a form of business organization, because startups often need a lot of money to get off the ground. They want to keep as much of it as possible. The LLC form of organization allows them to do that from a tax perspective. So it's really, really important and a key ingredient here in terms of your form of organization, that selection process that you'll be going through when you consider, do you want a corporation? Do you want an LLC? Do you want some other form for that matter? Tax treatment may be determinative, right? It may be the most important thing that you can consider in connection with forming your business. Management. So this section, I won't read the entire provisions here, but generally this section is about who has power to operate the business. And in a startup, it's usually the founder or founders What I will do here, rather than reading the main provision and the corresponding footnote, is read the main section, but I do want to talk a little bit about the footnote there because it also is important. So section 17, management, in accordance with the Limited Liability Company Act, management of the company will be vested in the member. The member shall have the power to do any and all acts necessary, convenient, or incidental to, or for the furtherance of the purposes of the company described herein, including all powers, statutory or otherwise, possessed by members of a limited liability company under the laws of District of Columbia. Notwithstanding any other provision of this agreement, the member is authorized to execute and deliver any document on behalf of the company without any vote or consent of any other person. The member has the authority to bind the company, and third parties dealing with the company shall be entitled to rely conclusively upon the power and authority of the member as set forth herein. A lot of words there. What it's saying, though, is that the member here, in this case, Casey has the power to act on behalf of the company. Now, if Casey had a business partner, and we'll talk about that a little bit later, but if Casey had a business partner, this provision might be very different, right? It might talk about the need to have Casey and the business partner agree to who has what powers, who has what authority, for example, over the day-to-day management of the company, maybe who has control over small decisions versus who has control over maybe the big strategic thinking about the company. Those can be really important discussions for a startup. And my firm in particular deals with a lot of startups in California and Silicon Valley. And those discussions are really integral to the foundational matters that those startups are involved with. And I think it's really important, again, for the reasons we've mentioned already, to have specific terms set out. If you do have a business partner, to understand who's doing what. You might be best friends. You will be better off, though, if a provision such as this one involved regarding management is spelled out in detail. There could be things that you're good at that maybe your friend isn't so good at. You would want to talk about that, document it here, probably in as clear and thorough terms as possible, so that your friend, who maybe your friend isn't so good at numbers or accounting, maybe you don't want your friend to have that authority to deal with those. You set that out here. Likewise, maybe you're not a great baker. Maybe your friend is. So you align those duties and responsibilities in a section like this one, where the parties will agree to who's doing what and when, for that matter, and so that there's no disagreement or issues down the road. Now, this footnote that I wanted to refer to, it talks about hiring employees, officers of the company, and so on. That's important, not so much in this context where it's just Casey at this point, but it could be really important. And to the extent that the company grows and adds officers and employees and so on, you'd probably want to tweak this, amend your operating agreement to account for those changes. And further to that point, I think it's important to think about the operating agreement as a living, breathing document. It's not just something that you necessarily will draft today, sign off on today, and then put it in the drawer. If your company is evolving and changing, your operating agreement should too. And you want to be thinking about that along with legal counsel or other counsel and trusted advisors that you may have, to make sure that your operating agreement actually reflects what you're doing. It reflects your business, its personality again, right? It really is the incarnation of this business. And so make sure that the two resemble as much as possible. If your company is doing something, make sure your operating agreement matches what it's doing in real life. That mismatch can lead to trouble, disagreements, maybe litigation. So your operating agreement shouldn't just be stuck away in a drawer and thought of as a final document. Once it's done for the first time, it should probably be amended. It should probably have someone take a look at it, your advisors, maybe on a yearly basis, so that you can make the changes that are needed to make sure that it's keeping up with the business. Things move quickly sometimes, but you should take time to do that. Other business opportunities. All right, so the member and any person or entity affiliated with the member may engage in or possess an interest in other business opportunities or ventures unconnected with the company of every kind and description, independently or with others, including, without limitation, businesses that may compete with the company. Neither the member nor any person or entity affiliated with the member shall be required to present any such business opportunity or venture to the company, even if the opportunity is of the character that, if presented to the company, could be taken by it. Neither the company nor any person or entity affiliated with the company shall have any rights in or to such business opportunities or ventures, or the income or profits derived therefrom by virtue of this agreement, notwithstanding any duty otherwise existing at law or in equity. The provisions of this section shall apply to the member solely in its capacity as member of the company, and shall not be deemed to modify any contract or arrangement, including without limitation any non-compete provisions otherwise agreed to by the company and the member. So I warned you, some of these provisions are really long, but I think it's important, again, to read them, understand them, digest them a little bit before we talk about them. I'll digest this one relatively quickly, though. What it's saying is, just because you're an owner of this company doesn't mean you can't own another company, doesn't mean that you can't even own another bakery for that matter. And especially in this case right now, where Casey is the sole member, the sole owner, not a lot there. But suppose you have a business partner, right? And the expectation is the business partners will only do the bakery business. They're not going to do anything else. You would need to change this provision a lot. And that's why when you have other people involved, you will need to think about these provisions very carefully. You can't just take this form document, again, especially if you have business partners, sign it up and think you're done. You might as well not have signed anything, because it didn't really document the agreement that you had. Maybe you had one agreement in your head and your business partner, your friend, had another agreement in his or her head. And if this document here, this operating agreement, doesn't memorialize your respective thinking, it's not doing anything. So you want to have that conversation, because this section, it says this section is about the owner's responsibility to the LLC and to the LLC's other owners. That's a key part of this, the LLC's other owners. That's saying a lot, and it's saying a lot if you don't have those conversations. So in this case, Casey can pursue other business ventures, isn't required to spend all available time on operating capital cakes. Why does it matter? As I said, it matters because the operating agreement governs the owner's relationship with the LLC and with the other owners of the LLC. If the operating agreement says that the owner can or can't do something, then the owner must abide by those terms, or there is another option here. You can amend the operating agreement. It's better to do that up front. Why is it better to do it up front? Well, if you have an LLC, an operating agreement that has this provision, and it says you can do anything you want, it means you can do anything you want. Your business partner can do anything that they want. Let's say you don't like that your other business partner has opened up a bike shop, right? Wants to sell bicycles, other things, and you don't like that. And you go to your business partner and you say, you know what, this isn't working. I don't want you to have that bike shop anymore. Your business partner probably is going to take a position that she wants some compensation for having started this bike shop and now can't do it in order to save this bakery business. That's going to cost you some money. It's better to have that conversation up front where it doesn't cost you money. It's better to think about it up front where it avoids the conflict. And it avoids, as this last bullet says, if an owner violates the LLC's operating agreement, another owner could be your best friend today, but another owner or potentially a third party could use that fact in litigation. So again, just to reinforce the point, think about these provisions up front. They might seem a little bit opaque, a little bit confusing, a little bit unclear. Again, talk to your lawyer, talk to another advisor, but flesh things out a bit. The most important conversation, though, to have, especially if you have a business partner, is with your business partner, and to make sure that the understanding that you all have is clear And then this LLC, this operating agreement, can document clearly what you both understand and expect. All right, turning to exculpation and indemnification. So these are long words, big words that basically mean you can't be blamed, and you can't be blamed for the company's wrongdoing or actions, and to the extent that you have any liability, you're indemnified or repaid, compensated for whatever it cost you. This one is important. And again, it's one of the elements that you should consider very carefully when you are choosing the LLC form. In terms of the limited liability in particular, if you have a desire for limited liability, and what this means is, okay, it's not saying that the company itself can't be held liable, right? The company can be held liable for wrongdoing, for breach of contract, for, let's say it enters into a lease, stops paying the lease. The landlord can still sue the LLC, right, for the rent that is due. What these provisions are about is to make clear, consistent with the law in the district, that the member him, herself, can't be held liable. And as it says here, if the LLC is run legally, right, formally, all of the appropriate steps are taken to document the existence of the LLC. The LLC has its own bank accounts, its own records. It's not intertwined with your own personal bank accounts, your own personal records. You keep things separate, neat, clear. Then courts should respect the legal form and the limitation of liability described in these very long provisions in this agreement. And that does mean that the owner can be sued in their personal capacity for the company's debts or other obligations. But this comes with a really big caveat, and it's this last prong here. There are ways where courts will find to pierce the corporate veil, and in order to allow a third party to get at the owner's own assets. And that generally is done in cases of fraud, or where, very broadly speaking, doing so is otherwise fair under the circumstances. And when you have a chance to take a closer look at these provisions, you'll see that there are references to, throughout the agreement, to keeping the company really separate from the owner's existence, right? If the LLC is a legal entity with its own identity, shouldn't it have its own bank account? Shouldn't it have its own records? Think about it really as almost another person. And if you don't want to be held liable for another person's obligations, make sure that it's clear that you and that person aren't the same. And the LLC, in the LLC context, it's the same. Observe those formalities. And if you're running the LLC out of your home, have different records. Make sure that things aren't intertwined or confused, because to the extent that you don't respect the corporate form, the organizational form of an LLC, third parties probably won't, and courts probably won't either. And now you've lost one of the really important aspects, benefits for having an LLC in the first place. So respect the form, and others likely will do the same. Admission of additional members. So one or more additional members may be admitted to the company with the written consent of the member, and upon such terms, including with respect to participation in the management, profits, losses, and distributions of the company, as may be determined by the member and the additional persons or entities to be admitted. This agreement, including Schedule 1, shall be amended as appropriate to reflect the admission to the company of any such additional member. So Schedule 1, just a reference to where you'd find a list of all of the owners, all of the members of the operating company. And this section is all about adding new owners. And as we've said a number of times here, owners of an LLC are called members. It's just a legal term. The owner is the member. As your business expands, right, you may want to take on take on some new members, some new owners. Things are getting successful. Maybe your business is so successful that it's expanding into other areas. You don't have the expertise to deal with those issues that pop up. You want to bring new people in. You want to incentivize them to come in. And so, what's the best way to incentivize somebody? Give them some skin in the game. Give them a piece of the pie or cake. And in this case, the case Capital Cake's business is going so well, right? Casey will use this provision to add a new owner who can manage a new bakery location in Georgetown. The new owner will want that same ability to participate in the operation of the business, and will only have that same ability by being an owner as set out in the operating agreement, because the operating agreement says who can do what and what powers they have. And so if Casey admits a new member wants to do that, the operating agreement here will need to be amended, right? Certain provisions will need to be changed to account for the fact that will now be 2 owners and not just 1. I've talked about a number of provisions today that you really want to think about. If you go from a sole owner scenario to bringing on your best friend, bringing on maybe 1 or more other business partners, the terms of the agreement are going to change. That is a fundamental change in your business, and you'll want to reflect that throughout the agreement. It's not just a matter of looking at this provision and saying, hey, I can add a new member, I can add a new owner. There are going to be repercussions throughout the agreement. A lot of the terms will change. In particular, just to highlight, you'll want to think about that liability provision. Who's liable for what? You'll want to think about the management provision. Who can do what and under what circumstances? So the admission of additional members, important to include here because it can account for some future growth of the company, bringing new people in to help play a role in the company's growth. But it doesn't stop there. You will need to be thoughtful about what changes you'll need to make to the remainder of the agreement. Again, just to keep the agreement in line with the actual business as it grows and evolves over time. All right, benefits of agreement, no third-party rights. So the provisions of this agreement are intended solely to benefit the member and to the fullest extent permitted by applicable law, shall not be construed as conferring any benefit upon any third party, including any creditor of the company, and no such creditor shall be a third party beneficiary of this agreement. And the member shall have no duty or obligation to any creditor of the company to make any contributions or payments to the company. And then the footnote here, if persons other than the member are entitled to indemnity under this agreement, the right of such third parties to indemnification should be referred to as an exception in this section. So this is kind of a corollary to the exculpation and indemnification provisions that we talked about before. It's saying the operating agreement is an agreement between the owner or owners and the company itself, and that it doesn't give any third parties any rights. And that's consistent with the whole point of an LLC, right? The LLC is a legal entity on its own, has an existence that third party, if a third party is dealing with the LLC, they should know you're only dealing with the LLC. You're not dealing with Casey, you're not dealing with Marc, Christine, you're dealing with the LLC itself. But also, as we talked about, in certain cases, especially involving litigation, a third party might point to a breach of the agreement by the owner as a basis to impose liability on the company or owner. It also might be the case that depending on the scenario, if you haven't observed those formalities, the court will basically say, look, this was an LLC only in form and in form only, and I'm going to look to you, Casey, or you, the owner, small business owner, for damages that were caused in the name of the company to this plaintiff. So again, formalities can be important, especially in the context of litigation, really important in the context of litigation. And so keep that in mind as you do things in the name of your company. And again, if your LLC's operating company says that the company or you as an owner can or can't do certain things, then act accordingly. Or again, you have the option to amend the operating agreement. And amending the agreement can be a really good idea. As your business grows, as it engages in certain other types of activities, maybe it's taking on more risk, right? And doing things that could potentially subject you were a court to pierce the corporate veil, could subject you to greater liability. You want to make sure that the operating agreement is consistent. Again, it's a living, breathing document. Think about it that way, and update it as appropriate. So some additional considerations here, just to think through. Keep in mind, your operating agreement should say everything that you need it to say, but only what you need it to say. And so you don't want to have an agreement documenting something that that says that the company will do that it's not doing. You don't want the agreement to document something the company says that it isn't doing, but is doing. So you just want things to match up. Don't have a lot of extra language in there. Be careful in your reading of it. Your lawyer or other advisor can make sure that that your agreement is tight. But common sense plays a role here. If something doesn't sound right to you, it probably isn't. And so do a gut check, do a review, make sure that your operating agreement just matches the reality, matches the expectations. If you don't understand something, strike it, talk to a lawyer, just make sure that you know what it says. If you don't know what it says and it's your company, make sure that you do before you establish your LLC or your operating agreement. And this is an example that we're talking about, right? General terms typically are better than specific ones. Again, unless you have a business partner where you might require more specific terms. And just to highlight a couple of specific examples where this might be important. If your LLC's owners include you and your best friend, you want to be specific about what powers and responsibilities each owner has. And that's the case with whether it's two best friends, 3 business partners just getting together because they have this great idea and want to get things launched. Things to think about. Can either of you alone sign contracts on behalf of the LLC? Do you both have to sign? Can either of you alone access bank accounts and spend the LLC's money, or do both of you need to sign off? The operating agreement should be explicit about those terms and other important matters as well. And it will be up to you and your business partner or partners to think about what could be the problems. And that's where agreements are really important. They're really good at either anticipating problems and addressing them, or just making sure that, as thorough as they are, you don't have any problems to begin with. So be thoughtful about what your LLC operating agreement says. Have a thoughtful discussion with your business partner or partners to make sure that there is no room for interpretation, no ambiguity. Lawyers are expert, right, at finding ambiguity and eliminating it. But as an initial part of the process, have that discussion with your business partners. It can be documented, set out in more specific terms by a lawyer or other advisor. But you all need to have that conversation in the first instance. It will go a long way to ensuring the longevity of your business. All right, questions. So last final thought here. Again, this was only general information about operating agreements in today's presentation. I can't say it enough. These agreements can get very complex depending on the nature of a company's business and ownership. If you do have any questions, though, again, please raise them now. I know we only have a little bit of time left, or contact the DC Bar Pro Bono Center at the following site. Such a great resource, such great people. Make use of it. It's there for you. And with that, Christine, I'll give it back to you.
Yeah, thanks, Mark. So a couple of really good questions that are going to be beneficial for everybody. First off, we kept coming back to this concept of this operating agreement changing, adapting, being reviewed, amended. When there's only one owner, it's a little bit easier to amend it. Do you have any thoughts or ideas on what the process should look like if there are multiple owners? You know, does it need to be everybody agrees on the amendments? Majority rule?
Yep. Yeah, no, great question. I have clients who, just taking one example, had a construction company, and the initial negotiation process was very protracted. Lots of issues came up. The discussion around amending was especially important because there were 3 owners. 2 of them were best friends. The third was basically an outsider. But the provisions for amendment were written such that the 2 best friends could basically always decide the fate of the company, which didn't seem quite fair to the third party, right? So I would say it really depends on the circumstances. In that kind of scenario, you might want to say in some cases it has to be unanimous to make an amendment. In other cases, for example, in the investment funds context, it's typically a majority of the owners. So I would say it's fact dependent, case dependent, business dependent. But you'd want to be thinking about that. I think the bigger point being, it can really be whatever you want it to be. Just make sure that it's in the best interest of everyone involved. And again, legal counsel isn't a bad idea.
And when we're thinking about, once the owners go through the process and figure out, yes, this is what we want, they put it in the operating agreement, great. But what if an issue comes up and it's not in the operating agreement? The business didn't know it was coming. Now the owners have a problem.
Yep.
Is there somewhere they can find the answer?
Yes, great question. So the operating agreement, it's good to be as detailed as possible because it's the way for the owners to decide their own fate. If they don't anticipate a situation, say correctly, fully, what have you, the law itself will provide a gap filler, and it will have default terms around how to deal with certain scenarios, any number of them. The code is very generous in allowing flexibility to owners to determine their own fate. It's also good though where an owner doesn't, or owners don't do that, to provide terms for how you resolve the question. So that's number one. I would say the law itself is a great gap filler. But to the further point of, well, let's say the law itself is unclear, what do you do? Number one, I would go to the small business clinic. That's number one. And then backing that up with legal counsel. Some of these questions can be very difficult, very difficult interpretive questions. But I think those are great first starting points to your point.
And are these gap filler laws that you were mentioning, is that in the DC code section, well, for DC LLCs on limited liability companies?
Yes. Sorry. Yes.
We just wanted to be clear for those who are listening later.
Yeah, no, exactly. The DC Limited Liability Act has provisions, these gap fillers essentially, where if your operating agreement, your LLC agreement doesn't have a specific term, maybe doesn't address a certain scenario, the DC law will step in and fill that gap.
Well, we are a couple of minutes over, so that this may be a good time. We've answered the most applicable questions, so I am really happy about that. Thank you, Marc. This was fantastic.
You bet. Yeah, thanks for the opportunity, and thanks everyone for attending.
Yeah, thanks to everybody joining. You will get a survey, so please feel free to share your thoughts there. We really appreciate getting that feedback. If you'd like to share this recording with other folks or come back to it, it was recorded and you can find a copy in the next few days at lawhelp.org/DC/NPSB. We will also email you a direct link to that page once it is up. And if you are looking for one-on-one legal advice on your operating agreement or a review of it, talking through some thoughts, please sign up for the Small Business Brief Advice Legal Clinic. and an attorney will chat with you about that. Thanks, everybody.